Last Red Friday, we pitted the VA cash out refinance against the home equity line of credit, or the HELOC, as we like to call it. And today we're putting the HELOC in another matchup, this time against the home equity loan. And since you guys all know I love a good acronym, I'll be referring to these as HELOANs and HELOCs. So we're going to put the HELOAN versus the HELOC. Which one's going to come out on top? Well, you're going to have to keep watching. Now, speaking of acronyms, it's Red Friday. Red stands for Remember Everyone Deployed. Whether they're deployed or not, whether they're back home safe or whether, tragically they've passed away, and I mean that in all due respect, we wear red here, not just for our deployed soldiers, but for those that have come back, those that we've lost. Wear red with us every single Friday, please, as a way to say thank you. I support you. I love you. I wear red for our military. So, speaking of red, down below, bottom right corner of whatever screen you're staring into right now, try to subscribe, follow, like. I want you guys to know every single time one of these videos comes out, and by being a fan, a follower, or a subscriber, you're going to be notified every single time we come up with these amazing videos, which we have today. So let's get started. I quickly want to review the pros of the HELOC, okay? I might write them up here, I might not, we'll just see how it goes. But first of all, on the HELOC, it provides an open line of credit, okay? Open line. You've got ongoing access in most cases to whatever equity is still available. Now, the amount available that you can borrow can be replenished every single month by you paying down your principal. Lots of cool strategies on how to do that. Also, no interest on unused funds. No interest, okay? You might have a $250,000 home equity line of credit on some funds. I'll just put that there, okay? We got regulators watching us all the time, making sure we're not misinforming you guys. This is educational. This is fun. Do your research, but if you don't borrow the full $250 because you didn't draw it all out during your draw period, you're only going to pay interest on the parts of funds that you're not using. And in many cases, if you're still in that draw period, it's interest only anyhow. Also, it's good for financial emergencies. I mentioned in a video, I was talking to a buddy the other day about getting himself a home equity line of credit, even though he doesn't need the money right now. Go get it while your home values are high, while interest rates are low, while it's easier potentially to qualify for. You never know what you might need it for. Also, very, very important pro, it's relatively short loan process. You can close these HELOCs in some cases like in a couple of weeks or less. So fast, okay? They can be faster than other types of loans. Now, let's talk about the HELOAN. You're going to come over here. On the HELOAN, some of the pros of the HELOAN is, okay, now we're over here, lump sum. For some people, getting one lump sum of cash all at once, that's a really big benefit. Also, fixed rates, okay? Fixed rates on the HELOAN. A consistent monthly payment amount, making budgeting easier. Because it's a fixed rate, because it's a lump sum, it's easier for those families that manage a budget and work towards a budget. It's good for large planned expenses that are happening right now. You're not going to have prepayment penalties because you want to pay the loan off sooner. Those are some of the top pros or benefits of the HELOAN. Now what I want to do is I want to go back and I want to review some of the cons of the HELOAN and the HELOC. I'm going to start first with the HELOC. So let's see if I can get all four of them in here. I don't know where my mind's going to go. Maybe there's more than four, maybe there's less, but I'll leave those bullet points there. These are the cons. The reason you do not, better put it here, cons. The reasons you might not want to consider a HELOC. Well, variable interest rate, or I'm going to put ARM, or variable, right? The interest rate is not locked in. It can change. And as we've been talking, 2022, 2023, interest rates are likely going to continue to go up. That could make this a bit scary for some people. Also, because it's a variable rate or an adjustable rate, your payments can and likely will change month to month, okay? Changing payments which makes what? Makes budgeting more difficult. Budgeting is tough, or could be tougher on a HELOC. Now there's a potential for payment shock, which in turn is going to create some financial difficulties after your draw period ends, because it's no longer an interest-only payment after the draw period ends, and interest rates may have continued to go up. Okay? Another one that people don't think about. You might lose access to your money or your funds. If the housing market starts to tank and home values go down, your lender has every right to come in and restrict that amount of your HELOC or what you can go after. Okay? Also, I didn't have enough bullet points. 2 payments. Now, when I say 2 payments, this is not necessarily the case if you have no first mortgage and you go get a HELOC first mortgage. But most people, and that's not what I'm talking to you about right now. I'm talking your HELOC is sitting behind your VA first mortgage or your normal first mortgage. So let's just assume you've got a first mortgage, you out and go get a HELOC, well, then you're going to have 2 payments, all right? I've mentioned in other videos, depending on what lender you go with and what your program looks like, you might have a prepayment penalty, so just watch out for that. Those don't exist a whole lot these days, but they could be there. You might also have some recurring fees, such as annual review fees or maintenance fees. Let's say you sit inactive and you're not using it all. The lender still needs to make money. Read the contract, read the fine print, talk to your loan officer. You might have some fees associated with inactivity. And you won't be able to borrow 100% of your home's equity on a HELOC, because this is not a VA program. Even though veterans can get it, do not think because a VA mortgage allows you to get 100% of your home's equity, you cannot here on a HELOC. Okay? Lastly, I've mentioned this from time to time, when you have a line of credit similar to a credit card, you may be tempted to go out and say, oh, I've got $20,000 left on my line of credit. I don't really need anything, but that handbag looks cool or that four-wheeler looks cool. It could tempt you to spend unwisely because it's an open line of credit. Going over here now to the HELOAN. We're still on cons. Now look at that. See, I forgot. I left the other bullet points up. I erased all these bullet points. Oh well, we're having fun. Here are some cons on the HELOAN. Your funds cannot be replenished by paying the loan back, okay? So no way to replenish, I guess, without going out and getting a brand new loan. So let's say you've got a ton of equity in your home, but you only get a $40,000 HELOAN. You use it all at once, and you're like, well, wait a second, I got another $60,000 in equity. Doesn't matter. You can't replenish the amount of money you can go after with a HELOAN because it's one lump sum all at once, okay? Interest is also charged on the entire loan amount, even if you don't end up needing it all. So in that same breath, interest on all the loan at once. Let's say you go back, you borrow this $40,000 in the HELOAN, and you look and you say, wow, I've only got $15,000 worth of credit card debt, so I'm going to pay those off, and I'm going to let the other, what would it be, $25,000 just sit in my bank account. Well, I can promise you, as it sits in your bank account, it's accruing a lot less interest than it's incurring, so you will pay interest on the entire loan. You're going to pay interest on whatever you borrowed all at once, so just keep that in mind. The process, sometimes, not always, but the process is longer than a HELOC many, many times. You're also, another con similar to the ones over here on the HELOC, you also cannot borrow 100% of your home's equity. Can't do that. Not 100% because it is not a VA program, though many veterans are qualifying for it right now. Also, like over here, 2 payments. Oh, we might end 5 to 5. 2 payments. It is an additional mortgage payment on top of your first mortgage. For most of you, that would be your VA loan. Now, interest rates on a HELOAN may initially be higher than they would be on a HELOC because they're fixed. They're fixed, right? In that HELOC, normally when you get an ARM, your rate's lower than it would be if you were to get a fixed rate. So, as you can see, HELOCs and HELOANs share a lot of the same benefits as well as a lot of the same disadvantages or cons. So how are you going to go decide which of these 2 loan programs is best for you? Well, I'm going to try and summarize that for you, but as you know from watching many of our videos, it's ultimately likely going to come down to each person's individual situation, their plans, their lifestyle, their budgeting. But let's see if we can't still come up with a lender in what's going to be my opinion, okay? Both these loans can be great, but it all depends on your needs. Why can they be great? Well, they both have a lot of similarities like we just talked about. For example, neither of them affect the rate, term, or payment amount of your first mortgage. It leaves your first mortgage alone, which is why so many veterans right now are interested in learning more about these loan types. Most of you guys have gone out and secured interest rates back in 2020 and 2021 that are super low. Neither of these programs require you to have any impact on your interest rate on the first mortgage. Also, it's possible to find both HELOANs and HELOCs with very minimal closing costs up front. That's a great benefit. They both have lower interest rates than going out and get a personal loan, a payday loan, or a credit card. And neither has limits on how you are going to use the money. There's very little, if any, restrictions. As long as you've got the equity and you qualify for the loan, have at it, go do what you want. So when it comes to deciding which one you should get, in my opinion, it's going to come down to these three primary things. And I'm going to list all three of them for you, okay? How much money do you need? How much money? Okay, for most of us, as much as I can get, right? But not if you're being reasonable and you're really thinking about your future. So consider, how much money do you need? Number two, what do you need it for? Okay, I would say if you need it because you're just feeling lucky, Powerball's at like 250 million. Well, I guess you wouldn't need a mortgage, but you get my point. Make sure you're being very, very intelligent on what you need it for. And third, probably the most important right now, is the current interest rate environment, okay? Rate environment. Can I reach? Yes, rate environment. We're in an increasing rate environment right now, okay? That's where we are at the time of filming this video. Here's how these three factors are going to come into play, most likely in your decision. If you need a small amount of money today, you plan on some periodic expenses over time, you're trying to create maybe a safety net that's there, then the winner for you in that particular case would be the HELOC. That would probably be the best option. However, if you need a single large amount of cash right now, you've got something specific. I know, for example, I would love to buy a boat next summer. Boats are not cheap, not like they used to be. Okay, that's a planned purpose. That's a planned expense. Then I might want to go next summer. I'll have it. Why borrow money now and pay interest rates on it now if I don't need it now? But then a HELOAN might be best in the case that I've got a need of one lump sum today. And finally, if rates are rising, which they are right now, I would consider a HELOAN because we don't know how high interest rates are going to go and how often they're going to go up. A HELOAN is a fixed rate if you do it right, and it allows you to get rates where they are today. Okay, now based on these factors, if I were going to pick which option is a better choice in 2022, what do you guys think I'm going to pick? Bingo, the HELOAN. I kind of already said that, but I just want to reiterate that. The primary factor here, interest rates are rising. The Fed's pretty much all but promised us they're going to keep going up. We don't know when the end is coming. This is a lot more comfortable situation for me, in my opinion. The variable rate of the HELOC could become disadvantageous if we stay in a long-term upward interest rate market. The HELOAN, however, it's fixed. It's going to keep your ongoing costs down, at least for the foreseeable future. I like this loan. So I hope this information has helped. I hope it's helped you learn the pros and the cons, the what's good and what's bad, if you will, about the HELOAN and the HELOC. Both of them allow you to access your home's equity. They're both amazing products. If you still have questions, feel free to call. Talk with one of our many licensed loan officers. There is never an obligation to work with us. We do, however, hope that you'll give us an opportunity to explain to you not only what program works for you, but why working with us is a better option than perhaps some of our very friendly and amazing competitors out there. Give us a shout and a call and a text. However you want to get a hold of us, you can do that. We've got lots of ways to reach out to us. We're here to help you guys. Thanks for watching. We'll see you next Friday.